Another day, another book. Today we'll be digesting the book The Intelligent Investor, written by Benjamin Graham. So whether you are new to investing or have been at it for years, this video is going to equip you with a mindset upgrade. We are diving into one of the most important books ever written on investing, The Intelligent Investor by Benjamin Graham. This is not some hype-fueled get-rich-quick playbook. It's a collection of timeless principles that have stood strong through market booms, busts, and everything in between. Let's get something straight right away. Most people think they are investing, but they are actually gambling. Benjamin Graham, the father of value investing, made this distinction crystal clear, and it still applies today more than ever. Here's the difference. An investor analyzes the intrinsic value of a business. A speculator bets that the stock price will go up even without understanding what the business even does. If your strategy is to buy Tesla on Monday and hope it moons by Friday, sorry to break it to you, you are speculating. But if you study the company, assess its long-term value, buy only when it's selling for less than it's worth, that's investing. That's intelligent. And here's the golden rule. If you don't know whether you're investing or speculating, you are probably speculating. Now here's a principle that can save you from major regret and potentially make you millions in the long run. Always invest with a margin of safety. Think of it like this. When you build a bridge that can carry 10 tons, do you only allow 10 tons of traffic on it? Of course not. You build it to carry 20 tons just in case. Graham's margins of safety works the same way. You only buy a stock when its market price is significantly below its true value. That gap is your protection. Why does this matter? Because no matter how smart you are, you will be wrong sometimes. We all are. The market can be irrational, earnings can disappoint, and black swan events can shake everything. Your margin of safety is the buffer that keeps you from getting wiped out when things don't go as planned. Smart investors don't just aim for profits, they build in protection. Imagine you have a business partner named Mr. Market. Every single day, he knocks on your door and offers to buy your shares or sell you his at a different price. Some days, he's thrilled about the future and offers sky-high prices. Other days, he's depressed and will sell to you dirt cheap. Here's the key. Mr. Market is emotional, irrational, and often totally wrong. But Graham's genius is in what he tells us to do with this character. Don't take advice from Mr. Market. Use him. You don't have to react to his mood swings. In fact, your job is to stay calm and make decisions based on value, not vibes. So when Mr. Market gets overly excited, that's your cue to sell. When he's panicking and throwing out bargains, that's when smart investors buy. Let the market serve you. Don't let it control you. Benjamin Graham said something profound. You don't have to beat the market. You just have to define your role. He breaks investors down into two camps, the defensive and the underpricing. The defensive investor is someone who wants simplicity, safety, and low maintenance. The index funds, diversified portfolios, and consistent habits over hype. The enterprising investor is more hands-on. They read financial statements, analyze businesses, spot inefficiencies. Basically, they roll up their sleeves and go hunting for value. But here's the mistake people make. They don't pick one. They try to act like Warren Buffett on Monday, then panic sell like a rookie on Tuesday. Graham's advice, choose your lane, stick to it. Don't get emotional when the market gets noisy. There is no shame in being a defensive investor. In fact, most people should be. Here's the part no one wants to hear, but it's what separates wealthy investors from broke speculators. It's not about IQ, it's about EQ. Benjamin Graham makes it clear you don't need to be a genius to succeed. You need to be disciplined, patient, and emotionally stable. Think about it. If investing were about raw brain power, Wall Street PhDs would all be billionaires, but they're not. The truth is, the market punishes greed, fear, and FOMO, no matter how smart you are. The real edge? A long-term mindset, a system you stick to, and the emotional strength to stay rational while everyone else panics. So if you're constantly chasing hype, panicking during dips, or switching strategies every month, it's time to upgrade from emotional gambling to intelligent investing. Let's end this one with one of the most misunderstood truths in investing. You don't need to time the market, you need to spend time in the market. People obsess when to buy and when to sell, but here's what intelligent investor teaches us. Wealth isn't built by guessing what will happen next week. It's built by owning great companies over years, sometimes decades. That's how you let compounding do the heavy lifting. Graham's core wisdom is not flashy. It's not about chasing trends or trading daily. It's about showing up, sticking to principles, and letting time and discipline create real wealth. Stay invested, stay rational, and stay focused on what matters. If you found this video helpful, I invite you to join my free email newsletter. Just visit kevinumali.com, and then I'll be sharing with you some free book reviews of timeless books like this one, in Health, Wealth, Love, Success, and Happiness. So again, visit kevinumali.com and hit the like button, share this video, comment what book would you like me to cover and discuss on the next video. So see you on the next one.